today we're going to be talking about the differences between institutional trading and retail trading. Now in this video we are going to break down and focus more on hedge funding and hedge fund trading, and then at the end we will touch on retail trading. I wanted to make this video more in-depth and detailed surrounding institutional level trading because I think it will be beneficial for you as a retail trader. The majority of retail traders already know how things operate on a retail perspective, so I think it's important that you have an understanding or a greater understanding of the industry that you are in and who the big players are and how they may affect your trading. So let's start. So hedge fund trading may be the highest paying job in the world. Typically you can earn 300k to 3 million per year. It's possible to achieve this over a 4 to 8 year period. Senior portfolio managers can easily earn 10 million a year if they're in a top 5 or top 10 hedge fund. How do hedge funds make money? Well, typically they charge 2%, and on top of that there's a performance fee which could be typically 20%. So if we take, for example, 1 billion hedge fund returning 10% a year on its investment, your annual revenue that you could earn would be about 36 million as a wage. Clients would receive about 6.5% a year on what they put in, and these figures are approximate, but they have been fairly typical over the last 20 years since the early 2000s. So how's this revenue shared amongst the employees? So 20 to 40% might go on operational costs, including premises, tech and operational staff. One thing to note is that the larger the fund, the lower the percentage. So 10% is just distributed among junior traders and analysts. 40% is paid to senior PMs who manage the traders. What remains could be anything up to 30%. That goes to the owner of the hedge fund. So they are often also a senior portfolio manager. So they're earning 40%, and on top of that they'll earn the rest. So they can earn a massive wage, obviously. Many of the costs don't scale up linearly with revenues, as mentioned up here. Running a 10 billion fund isn't nearly 10 times more expensive to run than a 1 billion fund. So that means that the owner is earning an even higher amount per annum. So the percentage is also very sensitive to performance. The owner gets what's left over after costs, which could easily be negative if they were to have a bad year. Traders and PMs within a fund are usually paid as a percentage of their returns, typically up to 20%. For example, if a manager returns 10% per annum, they'll receive about 1 to 2% of the assets they manage within a fund. So to put this into perspective, if they were managing 100 million in assets and they'd earn about 1 million to 2 million in that year. In addition, they receive their base salary, which is minuscule compared to what they're earning in bonuses, so perhaps about 100k. This means that their total pay can fluctuate year on year, and in some funds the percentage a trader can earn depends on performance, making pay even more volatile. So how much can an institutional trader actually earn? Well, a typical investment banking salary is between 100 to 300k. And to achieve this, you have to work in the industry on average between 3 to 6 years. After this period, you'll manage bigger funds as a trader or even as a PM. There are many types of trader, but we're talking about those with significant responsibility for making investment decisions. So typically you might manage 50 to 250 million of assets under management. If you are able to successfully earn 10% per annum on this large amount of money, then yeah, your income will be pretty decent. Could earn anywhere from like half a million to 3 to 4 million per year. But of course there's a good chance you'll fail to perform, which would mean earning only your base salary, which is still a decent wage. But the downside is that you could easily lose your job because you're not performing. So see the next 2 points. So even into taking into account the possibility of earning more, because it's hard to beat the market, even for hedge funds, even for traders at a senior level, a realistic estimate of expected income is probably less than half of the above figures. The old adage of past performance is not an indication of future results is very much rings true in this case. Worst case, if you lose money for more than a year, you could easily get fired. And how long you have depends on the expectations of the fund. So 1 or 2 quarters of bad performance at some funds could already prove risky to your job, to your career, whereas some funds might be more long-term focused. So you might have a number of years to perform to make some money. And some quantitative funds rarely fire staff, but let you continue in a more operational role. So you might be demoted in some respects and put on some operational desk just to help answer the phones, for example, still be part of a team, still earn a bit of a bonus each year. Worst case, you get fired from a top fund, you could usually get a job in a less prestigious fund. If you get fired from a less prestigious fund, you'll probably have to leave the industry or switch to a non-trading role. And total turnover does vary by fund, but it's not uncommon for trading roles to swap and change and to lose jobs. Typically 10 to 20% is the industry norm. If you perform well, on the other hand, then the amount you manage can grow rapidly. It's not uncommon to manage several times as much within a couple of months of starting. So if you hit the floor running and you smash targets, then you could be managing half a million to half a billion to a billion. But be realistic. Usually this sort of performance, it does take a couple of years, and it does depend on market conditions and what's happening in the world. Last year, if you'd started trading, of course you probably could increase the amount that you have under management due to the pandemic. So a senior PM would manage typically about $500,000 to a billion in funds. Now, if they achieve 10% performance on this, their pay could be anywhere from 6 to 12 million a year, though again average pay is probably less. Typically you have a team of about 6 to 10 traders per portfolio manager, and the chance of making it to a senior level is quite small, really, between 10 and 30%. In reality, it can be less, since many people leave the industry due to the stress of the job, basically, burnout. You hear about this often, and I've seen it firsthand, especially at the more junior levels, because as a junior trader you are being put under scrutiny and extreme pressure, and you are doing long days, long hours, and are expected to give your life to the business, blood, sweat and tears. Note that in some firms it's hard to progress from junior trader to PM, since the managers are recruited directly from banks like Goldman Sachs, so much more prestigious firms. And if you do end up owning and managing a hedge fund, then yeah, you can earn much more. The owner or senior manager of a 1 billion fund generating 10% per annum will earn about 15 to 25 million. The flip side of this, however, is if the fund fails to return at least a couple of percent, they'll make nothing. And if they just keep losing money over a period of a few years, they could easily go out of business, because nobody will want to put money into that as an investment. The owner and senior manager of a 10 billion hedge fund will make 10 times as much. In fact, they'll probably make even more, because many of the costs, as mentioned earlier, are fixed. So they get a larger fraction of the marginal revenue. And of course, very few people make it to this level. You'll always hear about those that do, and they're all over the news, famous names. A 1 billion hedge fund would probably employ tens of traders. So you could have a virtual floor, trading floor with maybe 20, 30, 40, 50 traders, maybe anywhere up to like 70, 80, 90 traders, suggesting each has only a couple of % chance of making it to being an owner, or even if you ignored the fact that the amount of people that drop out of the industry because they can't hack it. Note that some hedge fund managers will make more than these figures suggest, because they'll also invest their own money in the fund or diversify, which is the best way to do it. Just to give you an overview, the top 5 hedge fund managers usually earn over $1 billion a year. This is because if they are already part of a $10 billion hedge fund and they are able to generate 20% returns, which is common among the top performing hedge funds, then yeah, sure, you can earn about $2 billion a year. Much of the above also applies to prop trading. I'm not going to go into this too much. Suffice to say that prop traders, they trade on behalf of their institution rather than external clients. They usually exist within small partnerships and banks. Prop traders trade within a smaller amount of money, or trade with a smaller amount of cash, but are more make more aggressive bets, have a bit more flexibility. They typically receive a larger fraction of the returns as a result. So they can earn 30% plus rather than the standard 10 to 20%. And this means they end up earning a similar amount per year as hedge fund traders. So just to give you a slight difference as to what prop trading is compared to hedge funds. But I'll leave that to you guys to maybe go into more detail if you want to Google it, etc. To give you an industry average, looking at the above and making a very rough estimate, the mean average, so the mean earnings over an entire career in this sort of a job, if you last as long as, last more than 5 minutes, could easily be about £500,000 to £1,000,000 a year. And this is based on an average salary of say a junior trader or an analyst salary, plus a 10% or 20% chance of making it as a junior trader or trader, and a couple of percent chance of making it to an even higher role. The mean income in finance is about 245k a year. That's what we worked out, and this includes a wide range of jobs. So you have to take into account the entire spectrum of the financial industry. So, of course, if you didn't, it's not unreasonable to think that the mean for a trading role could be several times higher than this, which we did highlight above. So just to reiterate, really. And the highest paid finance workers in the US, for example, so 10 to 20,000 of these key workers, they earn on average about 1.4 million a year. Now, if you work for a top 15 hedge fund in the UK, one of the top 15 hedge funds, so just to put into perspective the difference maybe between the US and the UK, you could earn on average 200 to £500,000 a year within the first 4 to 8 years. So, of course, if you do last this long, then of course you're looking to increase your salary per annum to around £1 million plus. And the average employee at a top UK investment bank earns about £250,000 a year, and a typical investment banker aged 30 in London earns about 350k a year. So I'd expect a hedge fund trader to earn more. Now, that being said, hopefully I've given you a good overview and a bit of information about institutional trading, what sort of level to be at and how long it takes, and obviously the blood, sweat and tears, that's not included in any of that, and the stress of the job and the demands and the pressure that's constant, not to mention the psychological impact of it all. Now compare this to the benefits of then being a retail trader. So first and foremost, the biggest advantage a retail trader has above an institutional trader is time. So you're not having to perform consistently over 3 months, 6 months, 1 or 2 quarters, with the threat of losing your job. And of course, depending on the amount of funds that you have, and now with all these prop firm challenges that are out there, you are able to generate much higher percentage gains, because typically a hedge fund might look to make 10% a year at best, whereas you could probably do that in a good month. So trading with smaller funds allows for quick profit taking and much greater flexibility with trades. So unlike these institutional traders that take positions, that hedge their positions and that have money tied in for the longer term, you can go into the marketplace through your broker. You're not having to move millions and millions and millions and hundreds of millions of dollars, but you still have a large account under management as a prop firm trader. A funded trader, you could have say $1 million under management, and you've still got the greater flexibility of going in and out and scalping the markets if you so choose, and you'll get filled. Your orders will get filled almost instantly. So touching on the work-life balance, pretty much about the time. Well, the beautiful thing about working from home or working from your own office space or working from anywhere in the world for that matter, as long as you have internet, is a really appealing, for me at least, it's a very attractive way to work. Working on my own, I'm my own boss, working on my own terms. I work when I want, and I work for as many hours as I want. So I do it for the love of the job, and I'm not subject to worrying about if my boss is going to tell me to do more, work harder, or have to stay in the office later, etc., etc. So also the tax implications are much more flexible if you are your own trader, your own retail trader. Depending again how much you're earning, you could avoid paying hardly any tax on your profits earned. And some countries like the UK, it falls under the gaming laws, and in certain aspects, if this is not your primary income, you can avoid paying tax on your winnings. And finally, like we've touched on it as well, does not have a boss and is answerable only to themselves. Now, there's two sides to this. Obviously, I wanted to say it should be seen as a big advantage, but obviously governing yourself in this game could lead to disaster as well if you are not careful and understand how to manage your risk when you are in a trade. But we won't talk about that now. Hopefully this has been a beneficial video for you. If you have any questions, please look at all the links that are provided within this video, and you can get in touch with me via my Telegram as well at ALX_TYW. Thanks for listening.